Let's get in. Girish Pai, Head of Institutional Equity Research at BOB Capital Markets. Girish, good morning and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, let's start with the ones which have reported numbers, which is Tech Mahindra as well as L&T Technologies. If you have to look at both the companies, it's a different set of numbers that have come in. How are you looking at Tech Mahindra, taking into consideration the commentary? Because they are being absolutely eager and very optimistic in terms of what they're expecting to be delivered versus what the reality is. What is your view?
Yeah, firstly, thanks for having me on your show. So I don't track LTTS, so I don't want to speak about that. On Tech Mahindra, we have been positive on the stock because we have believed in the mean reversion of margin story. The margins were expected to go back to 15% at the EBIT level by FY27. So this was a guidance they had given at the beginning of FY25. And when FY25 began, they were expecting that FY26 growth would be better than what it is turning out to be as we speak right now. So this is what the management said on the call yesterday, that FY26 revenue growth is turning out to be a little weaker than what they anticipated. But having said that, they stick to the guidance of 15% EBIT margin by FY27. And the revenue guidance for FY27 is that they're going to come higher than their peer set. So let's wait and see whether they're going to change the guidance if FY27 industry growth tends to be a little weaker, which is what we anticipate. Then there could be some downward revision to that number. But as we speak right now, we think that they should hit that 15% number, largely because of internal initiatives that they have. So it is a hold rating that we have on the stock. We've continued with that because stock has kind of run up a bit. And we continue with that as we speak.
Girish, hi, good morning. Tamanna here as well. I was going through your report where you say uncertainty stays and eating the tariff may impact even FY27. Of all your calls, you've given 9 sells and 4 holds. Clearly, the overview on IT is not very positive from your POV.
Right. So we've been underweight on the sector for a fairly long period of time, ever since I initiated coverage on the sector and this particular firm. So we are saying that while there could be clarity on post the tariff announcements, which are going to come between now and August 1st or even after August 1st, the eventual tariff that would be levied on goods coming into the US could be somewhere in the high teens. Or maybe early 20s, compared to the 2.5% that was the effective tariff rate, which US was applying to goods coming into the US. And the US government is very clear that that should not be passed on to the customers. It has to be absorbed by the value chain in some sense, and more so the US corporations, which are the customers of Indian IT services firms. So my sense is that the profit margin of some of these US corporations will take a hit, not so much in 2025. I think in 2026, there could be a bit of a challenge here if they're forced to, take a hit on the margins because they have to absorb some of these tariffs. And that could put pressure on spending. And that could mean that discretionary spending is not going to immediately recover in the calendar year of 2026. So that is why we continue to be a little bit more cautious. Yes, there will be some clarity on the tariff front sometime in the next 30 days, but that doesn't mean that the cloud kind of lifts from the sector.
Girish, Wipro and LTI Mindtree reports numbers today. What's your expectation? Because clearly, at least on a consensus basis, Wipro is expected to look weak. But what should the street watch out for?
Yeah, so Wipro, we are expecting a 2.5% kind of CC revenue decline on a quarter-on-quarter basis, which is in the midpoint of the guidance they've given. Margins, we are expecting EBIT margins to be somewhere in that 17.5% territory. I think that's consensus as we speak right now. What one needs to watch out for is guidance for next quarter. My sense is that it will be either flattish or maybe slightly negative at the midpoint of their the range that they talk about. That may not be taken very positively by the street. And also the overall commentary is something that we'll have to watch out for, and the TCV, large deal TCV number, whether that is going to come in that 1 billion plus kind of region, is something that one needs to watch out for. So I would say those are some of the things, and the salary hike, whether they're actually going to come out and talk about a salary hike this year. Last year, they gave the salary hike in the month of September. Whether if that gets postponed, that would indicate that there is a little bit of weakness, or they see weakness in demand. On LTI Mindtree,
sorry, is there a buy call on any IT company with a long-term perspective, or what is a relative top pick in your view? Or it's a complete avoid?
no, so as things stand today, we have four holds from a short-term perspective, and I'm saying from a 12-month perspective. But if you ask me, if you take a 2 to 3 year view, Tech Mahindra continues to be a stock that we kind of prefer in the tier 1 space. In the tier 2 space, we like First Source and eClerks.
And First Source. Okay, tough one there. Thank you so much, Girish, for your time this morning.